Because first of all, thank you all for spending the time with Owen, myself, and Katie. Really excited to do this. Last time we did it on X Spaces. This time is a little bit of a different format. This is the internal Google Meeting infrastructure that we use for our meetings and for a lot of investor meetings with institutions. So we have a couple of prepared questions or pre-submitted questions, I should say, that we're going to start with. But we want this to be really engaging and interactive. Let's say in terms of like how to best do this, I think number one, like please stay on mute unless you're asking a question, just so we can manage like background noise and so on. But if you want to ask a question, I'll just use the raise hand functionality. I want to make this as interactive as possible. So if you look at the bottom of Google Meet, there's a raised hand function there. We also have, if you go to more questions, more options, there's a Q&A function. And so if you don't want to ask the question live, you could put something in the Q&A chat that Owen and Katie and I will see. People can upvote questions there. And so we can also answer questions that way. So we'll kick it off. I'll turn it over to Katie for the first question. Like I said, we'll do 4 or 5 pre-submitted ones, and then we'll try to get into live questions from there.
Awesome. Thank you all for joining. So first question, Block in 2025 is vastly different to its past, but some skeptics still view it through the lens of the past few years. What would you say to them?
Well, first, thanks everyone for joining. Appreciate it. Thanks for taking the time. I think the answer to this question is that we just have to execute. I think there are a lot of things that are different, right? Like I think the way that AI tools are flowing through is different. I think we've functionalized the company from a product development perspective. I'm incredibly focused on just high quality, high velocity. We have new leaders in a number of roles on Jack's executive team, but I always think it's a bit of a fool's errand to try to describe the ways in which things are improving, compounding positively, and just feel totally different than the past couple of years. I think ultimately we have to just ship incredible products and features to our customers. We have to prove it, and then like the proof will be out there for everybody to see. I think that there's differences in like potential skepticism from like the folks who are super active on X relative to some of our institutional investors or the folks who work at the company. I think we have an absolutely incredible team that's executing at like a really, really high clip. I think Jack is one of the few folks who have started multiple public multi-billion-dollar companies, and then like on top of that you have Cash App, and on top of that you have Proto. I think that he's surrounding himself with some absolutely incredible people in the form of Nick and Thomas and Brian Boats and Amrita and so on and so forth. So right now, and this was the note that Jack sent to us after Investor Day. It was kind of like, good job on Investor Day. Now let's just go execute. So ultimately, I think we're gonna prove it to the market. We're gonna prove it to our customers. We'll prove it to ourselves. And that's what it comes down to.
I would just add, like, I think ultimately, as Owen said, the proof will come in execution, and we have to execute now. Like what we put out, we're pretty proud of Investor Day and how that came together. Like now we have to execute on it. That's far more important. I think it comes down to people first and foremost. So I was an investor and shareholder in Block/Square for a number of years. I started covering the sector in 2013. And one of the reasons that I wanted to come to Block was the people. So like I had deep belief that Amrita was one of the best CFOs in my coverage universe when I was at Wellington. I don't think I ever told Owen this story, but I developed a pretty good sense, I think, as an investor, like knowing when people have like it in air quotes. And before I joined Block in the beginning of 24, I actually met with Owen in September of 23. I don't know if you remember this. We came through Boston, and like within a few minutes, it's like, all right, that guy's got it. Like as an investor, and putting aside like the operational side. So Owen can talk about all the other folks here, but I also think like his elevation is quite important. But I think we have a really strong management team across all the different foundational pillars of the business and all the different functions, whether it's the business that Owen leads, go-to-market that Nick leads, hardware and Bitcoin that Thomas leads, finance and operations that Amrita leads, like Jack overseeing all of it. There's just a lot of really good people here. And so it's incumbent on us and them to just execute from here.
Awesome. Thank you both. So our next question is on Cash Local. Any more clarity on the rollout strategy for Cash Local? Brian said it won't be neighborhood by neighborhood, rather national directly. And then there's a few other components of this question I'll add on. How is the onboarding rate for merchants? When will people see local tab and Cash App? And is this initiative priced in 2026 guidance?
Awesome. Thanks for, I don't know who had the question on the call or if the person's on the call, but anyway, thank you for the question. Well, first we have to move away from local because I think we were calling this Cash Local for a while, but we've rebranded to Neighborhoods, and we launched Neighborhoods at Square Releases, which was super exciting. I think this is going to be one of the most meaningful products that we scale in 2026 and probably for years to come. I think it's the first time that we're really seeing and feeling the connectivity between the consumer side of the business and the seller side of the business. In terms of just getting to some of the points that were raised. So one, in terms of how we're onboarding merchants, the rate of merchant onboarding is accelerating really quickly. And so this is one of, if not the primary things that Brian is focused on. For those of you who don't know, Brian Grassadonia was the co-founder, co-creator of Cash App. He led the Cash App business for more than a decade. And then he more recently switched into an ecosystem lead role. So his primary focus is on connecting the different parts of the Block ecosystem. And I think Brian is one of the best product thinkers in the world, one of the best product thinkers that I've ever worked with. And then as I think about the ramp of onboarding merchants onto Neighborhoods, we're increasingly able to leverage AI tools that will help us do this way faster, which I think is incredible. I think this sort of product problem would have been different 5 years ago relative to what it looks like now. So you still have the kind of classic supply and demand opportunity that you might see for a typical kind of two-sided network business. But we're able to address the supply side and the demand side in a pretty meaningful way because we have the Cash App consumer base, we have transactions that are flowing through at the point of sale already, and then we can leverage AI tools to move even more quickly. So when I put all of that together, I would say we're going to start feeling this in the Block business in 2026. In terms of how I think about this flowing through, I think the primary impact on the Cash App side is likely just a big tailwind for actives. On the Square side, it probably more so comes down to retention, but then also sales win rates. So Nick and the sales team are talking to merchants and selling the concept of Neighborhoods. And then as we stand now, I think part of this question was neighborhood by neighborhood versus national. So as it stands now, if a given seller has onboarded into Neighborhoods and you complete a transaction at the point of sale, and you've kind of followed that flow through into Cash App, you will see the Neighborhoods tab and you will kind of be in the program. And we expect this to be happening more and more going forward as we get more buyers familiar with the experience, and we also get more sellers who are onboarded. And then in terms of 2026, I think what Amrita mentioned at Investor Day was that we've definitely layered in some modest costs as it relates to some of our new initiatives on the product development side for 2026 and beyond. But I think that we have a massive opportunity to outperform our expectations. I always like to talk about there's guidance and how we talk about guidance, and then there's the goals internally that Jack is setting, that I'm setting, that other leaders of the company are setting for our teams. And I think we have a massive opportunity here to outperform, both in terms of the impact on the seller side as well as the consumer side.
I'll just add one point. One of my favorite slides throughout all of Investor Day was the slide that Brian shared on the cohort curves of the percent, as time goes on, what percentage of a seller's customers are signing up for Neighborhoods. There's still small beta tests, data samples, and so we have to take it with a grain of salt there. But we're seeing from the earliest cohorts that 4 to 5% of a cohort's customer base are signing up to Neighborhoods. And some of the sellers that have leaned in most aggressively and most successfully are seeing 10 to 11% of their customers signing up to Neighborhoods. That is a phenomenal outcome in terms of what you would typically see for a loyalty program. For some of these sellers to see 1 in 10 of their customers engaging with following them, which you can then build more retentive relationships between seller and consumer. it shows the power of the platform and the potential of the platform. And so it's incumbent on us to execute it and scale this more meaningfully in 26, 27 and beyond. But the early data that we're seeing is really encouraging, and we think will ultimately accrue to us in the form of getting more sellers onto the platform that are excited about this functionality and getting some of their customers into the Cash App ecosystem, some of whom for the first time, and others that are people that haven't engaged with us as much historically as they could going forward.
There's a simple heuristic that's been helpful when I've talked to some of our institutional investors. So this is kind of a win-win product where obviously for sellers the program is just incredible because they're getting kind of a state-of-the-art application essentially where they're able to market to their customers to drive growth. That's massive. From a consumer perspective, you're getting rewarded with local cash and you're getting a super easy seamless checkout process. So that's great. I think on the business side, one heuristic that you can think about is to what extent is Block going to be able to turn the millions of points of sale that they have in market into an upsell for Cash App. And to the extent that you can successfully do that, you can see that being a really, really meaningful driver of subsequent actives growth and also probably shifting the composition of what the average consumer on Cash App looks like over time. So I just see so much opportunity here, and we just have to keep shipping.
Awesome.
Before I get to the next question, Katie, just a reminder that if people want to ask questions live, please use the raise hand functionality, which should be at the bottom, middle bottom of the screen. And then if you go to the far right, there's 9 blocks that called meeting tools. There's Q&A functionality in there that people can ask questions that way too.
Great. So next question is on Square. Square had very healthy growth in international markets. Wondering if you could spend a bit of time breaking down the individual markets. What competitive advantage does Square have in these markets? What market excites you the most? What challenges do you face? Also, are you able to give us some insight into the expansion into Mexico and Latin markets?
It's a lot, and we're getting a lot of multi-part questions that we usually don't let people do on earnings calls. I'll talk a little bit about our international portfolio on the Square side. So I think we have tremendous market fit with the offering that we've brought into these geographies. One thing that we do on the development side for Square is that we're global first. So by and large, when we're building a new piece of hardware or a new piece of software, we're building that in a way where we can take it global, either instantly or incredibly quickly after we launch. And I think that that's really important, especially as you think about kind of the trajectory of Square going forward. In addition to that, we have an international development team on Square that's focused on incremental features and incremental products that are necessary in particular markets. And so we've been able to ship those things locally in Australia or in Japan or what have you. I think some of the strong growth rates are coming from a number of places. One, I think it is just mathematically true that we're growing off of a lower base in some of these markets. And so when you have the amount of NVA that we have at the overall Block level and such a large share coming from international, you're going to see higher growth rates compound over time. But also, I just think about the TAM. So the TAM for Square in the US is absolutely massive, like trillions and trillions of dollars. And then internationally, it's equally large, even if you discount it to some extent based on the size of the economy or the size of consumer spending. And what we see is that in some of these international markets, we're competing more with very legacy point of sale systems versus going head to head with another kind of cloud-based point of sale system. So we're still not even close. I don't even think we're in the middle of this transformation from the legacy way that small businesses would take payments to this modern way using a tool like Square. And when I walk in, I try to visit our markets, every market every year. And when you walk in some of the markets that we're in outside of the US, it's way more likely that you're going to see either a true cash register with a sidecar or a legacy point of sale. And so that allows us to be really successful on the go-to-market side. I think part of this question was around just some of the biggest opportunities that we see. I think that go-to-market and how we're approaching this, both on the marketing side, the account management side, and the sales side is a huge opportunity for us. Nick talked a little bit about this during Investor Day, but there's motions that we've developed in the United States that we haven't even brought to some of these other markets. And I don't think that in some of our core verticals, I don't think that there's an issue with market fit or feature gaps or anything like that. We just need to go and talk to the sellers, win the sellers, and bring them into the Square ecosystem. I think some of the markets where I'm most excited about that are probably Australia, the UK, Canada. I think it's going to work generally, but we just see such a tremendous opportunity and really strong ROIs for any go-to-market activity that we bring into these international markets.
I'll just add a couple of thoughts. I think the market structures outside the US are really favorable. Like Owen was talking a little bit about it, but if you go to Japan, for instance, there's still a lot of cash in the economy. And so there's still somewhat of a rising tide that helps everybody as cash to card or cash to digital payments conversion promulgates in Japan. And there's actually more government mandates now across Japan to digitize the economy more. And so that's something that's additive to our business. If you go to a market like Australia, 70 or so percent, somewhere in that ballpark of market share in payments is still owned by the big four banks in that market. And so you have really good market opportunity where our technology is just leaps and bounds ahead of many of our peers. And we're now putting go-to-market resources and go-to-market weight behind it in a meaningful way that we're pretty excited about. There's also a question toward the end of that on expansion into Mexico, which we talked about a little bit at Investor Day. I think one of the things that we talk about a lot, and it's not just lip service, is just velocity and speed. So we've got into markets successfully historically, but it's just been a big lift because you have to get hardware certifications. There's a question in the Q&A on dealing with different payment rails and complexity. Going market by market is complex, especially if you want to get your hardware certified and you want to get into individual local payment schemes and so on. And so we've been toying with ideas like how do we get to markets outside the US faster? And how do we do so through partnerships, like maybe a lighter lift on our side that can allow us to get into markets quickly, learn, test, and iterate such that we find product market fit in certain countries and we invest more there. And we just iterate and learn at a really fast pace. That's what we're doing in Mexico. That's what we plan on doing in other markets in Latin America over the course of the next few years. Still very small. We're talking about a very small handful of sellers, but we're now at a place where the cadence of learning in these international markets is just faster than we've had historically. And that's something that I'm pretty excited about.
Great. And it looks like we have a few more questions in the chat here. Just a reminder, if you do have a question, click the 6-dot button in the right bottom corner and you can ask a question in the chat here. Next question that we have is, can you talk about some cultural changes in the new functional org?
I think there's been a number of changes from a cultural perspective. I'll talk through how some of them are flowing through. The first is just on talent density. So before the functional org model, we had pretty hard lines between the different business units like Square and Cash App, so on and so forth. But we also had a GM model on the Square side. And I think one of the benefits that we've gotten by functionalizing is that our design team and our creative team rolls up to Brooke Ellis, who's our head of design. The engineering teams roll up to Arnaud, who's our head of technology. The product teams roll up to me. This has been really powerful in terms of our ability to attract and retain world-class talent, because I still think at some point, some of the best engineers or best designers in the world will want to report to someone who's an expert in that field versus, let's say, reporting up into me. I think second is probably around flexibility. So for the first time, we have an overall Block roadmap. We have a meeting every Monday for 4 or 5 hours. Me, Jack's leadership team, and then a lot of people coming in and going, where we're reviewing the projects, the priorities, the deadlines, the metrics for all of the key development work that we're doing at the company. This one gives us a bird's eye view of development at Block, which is quite helpful. But then it also allows me and Brooke and Arnaud and some of the other leaders to shift resources according to what's the most impactful and what's the most critical thing for Block or for a given brand. that thing was not happening before in the old world where you had strict business unit lines. There was no motion to move 30 people who were otherwise on Cash App to focus on something related to Square and so on and so forth. I don't think that the things that we launched at the Square releases this year or the Cash release most recently would have been possible if we weren't in the functional model. And then I think this isn't necessarily because of the functional model, but I think one of the other cultural changes that you're seeing flow through is we're AI first. We're focused on how these incredible large language models can transform not just our products for our customers with MoneyBot and ManagerBot, but also how we operate at Block. This is probably one of the key things that Jack is focused on. I would say the key thing that Jack is focused on. And how that manifests is just a relentless focus on high quality, high velocity. And so that's now the drumbeat within the development team. You're seeing it and you're feeling it. And we're going from a place where when we used to look at a feature review or a prototype and look at the timeline, there was some pushing and questioning on the margin. Now, increasingly every day, multiple times a day, the conversation is how are we going to leverage these AI tools in order to move 2 times faster, 3 times faster, 4 times faster. And so there's a fundamental rethinking of how quickly we can build at Block. And I think a lot of that is the AI tailwind, but also having Jack at the helm overseeing this functional team, having the leaders on Jack's team really bought into this new style of building is also permeating throughout the org. Those are probably the 3 top ones that I would say.
Great. Our next question comes from Block Whale. Reply being global. There is a term you have used for upper management previously, inner core or something like that. Could you elaborate on the structure of that and how frequently people from that most senior management team actually travel globally to check out non-US areas of the business?
Sure. This can be pretty quick. Jack's leadership team is called Inner Core. I don't exactly know why. There's another layer, like concentric circle, that's called Core. Core is made up of the, let's say, 80 to 90 most senior folks at the company or most impactful folks at the company across all disciplines. It's ICs, it's managers, it's engineers, designers, product managers, folks on the go-to-market side. And those are kind of 2 concentric circles that we have that we refer to. So apologize if you didn't know what Inner Core was. It's by and large, it's the folks who presented at Investor Day. And then from a traveling perspective, I would say incredibly frequently. So I've traveled every week for the past 7 weeks. I'm frequently traveling internationally in ANZ, Japan, Europe, Canada, UK, etc. Nick is traveling right now. Amrita is traveling right now. And so I think it's absolutely critical. And sometimes we divide and conquer, or sometimes Brooke and I will go to a market together and spend a week there. But then sometimes Inner Core also will travel together. And that's a great opportunity to engage with the team, but also, as you said, to walk the street and see sellers. I think for a lot of people post Afterpay acquisition, being on the ground in ANZ and seeing how many merchants, not just online, but brick and mortar merchants were accepting Afterpay and how stitched into the culture in Australia Afterpay is a bit of an aha moment. And you have other experiences like this as well when you go to Japan and you see QR code payments in a way that's completely different than the United States, and so on and so forth. So we're traveling very, very frequently. We're going to all the markets that we're in, sometimes by ourselves, sometimes as a leadership team altogether.
Thanks for that, Owen. So next question, I'm going to go with the one with 3 likes here. It's an anonymous question on Square. So Square is scaling well globally, but it seems like Cash App also has ambitions to expand internationally. What is Cash App's international strategy? Would you prioritize launching Cash App in markets where Square already has strong penetration so that neighborhoods can be a focal point from day one?
Great question. Just to set the stage on international expansion for Cash App before I answer the question, we made a deliberate decision about 18 months ago to really focus on the opportunity that we saw in the United States. And it was one of those tough prioritization decisions where you're looking at this massive opportunity in the US relative to entering a new geography. We thought that the opportunity around primary banking actives and around what we call the next generation, but in particular teens and families, was so massive and so perishable in the United States that we decided to devote a meaningful number of development resources to focus on this opportunity. I think that we've capitalized on that decision to a large extent. And also, as I said at Investor Day, I think there remains a tremendous amount of room for us to grow with our with prospective customers and existing customers in the United States. That said, it's always been our mission to redefine the world's relationship with money. And we chose those words very, very deliberately. I remember being in the room when we chose those words on the Cash App side. So the question is correct. We do have ambitions for Cash App to be a truly global company. I think that there's two possible ways where you could think about international expansion for Cash App. One potential avenue for Cash App could be leveraging Bitcoin rails and potentially stablecoin rails. That's one of the things that we talk about when we talk about our interest in Bitcoin, is that it is open and it is global first. And we think we could do a lot to create an incredibly simple experience for consumers if we were to go that route. The other model that you could imagine is more, I would say it's more traditional. It's more working with sponsor banks and moving your portfolio of products into some new markets. On the second strategy for how you could go international, what I'll say is that I do think that we would be cognizant of all of the assets that we have. And we would want the believability that we were going to be successful in a given market to be as high as possible. So if I think about a market like Australia, we have not only the Square side, but we also have just a tremendous brand and tremendous market fit with Afterpay. And so you can think about what are the advantages if you were trying to grow a consumer experience in a market like ANZ relative to a given market that might exist where Afterpay does not have a scaled customer base and Square does not have a scaled customer base. I do think that there's an opportunity to think about local in markets other than the United States over time. But right now, as I said in the response before, we're in the early days of scaling neighborhoods in the United States. We think this is an absolutely massive opportunity. And then we'll take it from there in terms of how we might proceed on a Cash App international expansion strategy.
Next question is, how is the adoption on the new Bitcoin on Lightning? Last I checked, about 4.4 merchants had already signed up for this and 2K still waiting, and you are getting about 300 to 500 new merchants every day. Also, how about new feature adoption on Square? Are the new AI features helping clients?
Thanks for the question. I'm not going to be able to get into the specifics of the numbers. I think we've been really pleasantly surprised with the adoption of this is not just Bitcoin on Lightning. I would think of this as Bitcoin payment acceptance for Square sellers. I think we approached this work over the past 4 or 5 months in a really unique way where we're offering maximum flexibility to both sides of the counter. And I think that's really, really critical because we could have chosen to go down a different path. So now with Square Bitcoin payment acceptance, Bitcoin conversions, and then dollar on Lightning or just native QR code scanning for Cash App, transactions can go from fiat to Bitcoin, fiat to fiat, Bitcoin to fiat, or Bitcoin to Bitcoin. I think I got that grid correct. And then it really comes down to the incentive structure that's going to drive behavior on both the consumer side and the seller side. There's definitely folks in the United States who are incredibly passionate about Bitcoin and who want to pay for goods and services in Bitcoin. And we are seeing that. And we think that we can be a leader there because of the two sides of our network. I think what's more interesting is on the seller side, increasingly what you're seeing is sellers who potentially don't care all that much about Bitcoin, who are still choosing this payment rail because we're offering free processing. That's a pretty huge opportunity for our sellers. If you think about the average small business, costs are an incredible burden. They're probably running in, let's say, mid-single digit, high single digit margin. And so being able to give them that cost savings is just huge in terms of incentivizing behavior. So we're seeing really healthy growth here in terms of how sellers and buyers are using this. And also, it's pretty early. It's been a few weeks since we fully rolled out Square Bitcoin payment acceptance. And then I think 2 days later at cash releases, rolled out Dollar on Lightning within Cash App. And then just last week, we were in DC talking about the de minimis tax exemption, which will help, I think, further Bitcoin payments at scale. So I still think this is kind of inning one here, but we've been really happy with the metrics that we're seeing. And I know folks are tracking along with the Bitcoin map in Cash App as well, where you can find sellers where you can pay with Bitcoin.
Just like underscore something that Owen, I think you said at Investor Day, but there hasn't been a debit network created at national scale, or any network for that matter, in like 40 years. And Lightning, like functionality, like sending US dollar from a consumer, settling in US dollar at a merchant, like it's just like a paradigm shift for Bitcoin that I'm personally like really excited about. It was like a light bulb moment for me as someone who studied this industry for the last 12 or so years to see this actually start to come to fruition. I think it has the potential to be really powerful over the next several years.
Great questions coming in. So on the same topic of Bitcoin, for Proto, how robust is the current pipeline and what do you expect as the typical length of the sales cycle?
I'll give it to Matt for the sales cycle, but the pipeline is incredibly strong. I've spoken to a lot of miners and I've been in a lot of the conversations over the past several months. And I can say there's tremendous excitement for Rig. It's one of those interesting markets where the concentration of potential customers is quite high. It's not like you have hundreds of thousands of potential customers that would pay large sums of money. And it's also a market that's pretty low CSAT, where basically every miner that I've talked to is unhappy with the current hardware offerings. And so when you put that together, it's quite easy to have dozens and dozens of conversations where we're offering something that is fundamentally better, both the hardware and the software and the cost profile and made in America from an American company. And so really excited about the progress that we've made. I know we had our first gross profit flow through in Q3 and excited for more results to come out soon. In terms of the sales cycle, Matt, I don't know if you have a perspective on that. I think it's more about like build time and dev time right now than like papering contracts. But Matt, what's your take?
Yeah, I would say I think that's right. We had the Proto launch event in I think it was September or August. I can't remember exactly, but earlier this year, a few months ago. And that was, to me, was like a 0 to 1 moment for sales pipeline and sales conversations where the miners in this industry like very much want to see and feel the product because they've been burned in the past by Vapeware. And even if we're Block and we have a deep commitment to Bitcoin, as many of them know, like they just want to get their hands on the product. And so getting the first opportunity to actually see it in person and then get like some orders for beta testing and so on over the course of the last couple of months, I think has had an enormous impact on sales pipeline and the conversations that we're having. So nothing to share specifically on sales pipeline. It does differ by company, but a lot of companies now are in the process of testing Proto to understand how it fits potentially into their infrastructure. And so I think there'll be more to come from us in 2026 on that.
Thanks, Matt. Thanks, Owen. So there's another question that just came in asking revenue figures are distorted by how Cash App Bitcoin transactions are accounted. This is why the headlines read as Block missed top line estimates. Also, XYZ doesn't show up in stock screeners looking for growth comps for the same reason. Are you considering to fully exclude Cash App Bitcoin transaction from revenue?
Yeah, I can take that one, Owen. But so absolutely right that the accounting for Bitcoin throws off some of the revenue growth composition and analysis there. There's actually a principled reason why the revenue accounting exists that way. It's a gross accounting, which I won't get into all the nuts and bolts, but functionally what we're doing is we're buying Bitcoin for some cases for a fraction of a second, in some cases for minutes, and then selling them on to our customers. We think that's a better customer experience. That's how the product has been engineered. I don't think that we will change that product architecture. It would be a pretty big engineering lift, and I think it might be a marginally lower quality customer experience. And so I think the focus is on education as opposed to changing product architecture to get the accounting treatment the way that we think it should. I think there's a couple of things. One, if we can devise a way to make the engineering lift lighter, to make the gross to net transition and make the product experience equally as good for customers, we will do that. But customer experience is number one, like for everything here. And so I think until we figure that out, we're in this accounting regime. There's also been conversations around changing the accounting more broadly across the industry. I don't know where those stand candidly, but I think the biggest opportunity for us is not to change the revenue recognition accounting or how the product works, but to just educate people and continue to reinforce that gross profit is the metric by which we define our own success and how people should evaluate us. I think most investors understand that, but I do think there's opportunities to continue to reinforce that and drive that message home more broadly.
Thanks, Matt. Another question here on Square. So is Square on par with other FSR players today? What product enhancements are required to, if any, to close the gap? How does Cash App Borrow Afterpay perform in a recession? Is a follow-on from that. So we'll start with those two. There's one more we can ask after embedded in this.
A lot of multi-part questions. So on the FSR side, we see a large share of. Sorry, I'm just gonna. Okay, we see a number of full serve restaurants that are using Square, and it works fairly well. There's actually a restaurant group that I'm really close with where I live. I spend a ton of time there. I set up all their points of sale. I set up all their receipt printers, all their ticket routing, so on and so forth. It's a full serve restaurant. They love Square. We just got them a bunch of handhelds a couple of months ago. I think that the way that I think about it is not just by vertical, in other words, like MCC or audience, but also size. And so I would say in some places, like on the SMB and mid-market, which is up to like moderate complexity, we do have really, really strong market fit with full serve restaurants. That said, there's definitely some features that Square doesn't have right now that some folks in the competitive space do. We obviously understand what those are. We understand what it will take to build them. It's things like specific types of analytics for FSRs, how we think about modifications to the kitchen display system, fulfillment platform, so on and so forth. I don't think that it's all that far away. And then increasingly what you heard me talk about at Investor Day was quick serve restaurants were such a massive opportunity for us, not just because of the market fit that we had, but also because of the role that they play in the neighborhood. I think there are other types of merchants that play similarly significant roles in the neighborhood. So think about FSRs, full service restaurants, or simple retail, corner store, grocery store, so on and so forth, where it would make sense for Square to ensure that we have really strong market fit in these verticals. And that would only further our neighborhoods product, which would only further Active's acceleration in Cash App. So there's a handful of key features that we need to land. I met with Nick and the development team on Square a week ago, and I don't think it's a massive gap relative to what exists or what is expected by like a traditional mid-market full service restaurant.
Just to add on there before we get to the Cash App Borrow Afterpay recession part of the question. There's a lot, like I think the product focus on this question is spot on. I also though wouldn't dismiss the go-to-market dynamics and the fact that we have such a broad horizontal platform. We can serve QSR, we can serve FSR, we can serve retail, we can serve services. There's a lot of value in the product capability being that broad. Now that we're bringing field sales much further into the mix for Square, we started at, as Nick was saying, we started at 0 about a year ago. We expect to end the year at 150. having the breadth of product capability allows those people to be more efficient and serve a much wider range of sellers. There's a Slack channel internally that just kind of highlights every field sales win that comes through the door that I track occasionally. There are a lot of examples where a person will go and try to win or successfully close like a QSR in a neighborhood that's maybe doing, $2, $3, $4 million. And then they'll happen to walk by the next door and see like the barbershop is still taking just cash or is on like an ancient point of sale technology, and they'll close that too. And so one of the benefits of having the field sales motion and leaning really hard into product functionality and the go-to-market functionality at the same time is that we can be much more diversified across the sellers that we win. It's like we go to market and we try and win QSR and FSR, and then we go throughout the neighborhood and see all of the other sellers in the ecosystem or in the neighborhood that we can serve with our broad ecosystem.
Thank you both. So the last part of this question before we move on to the next one is what macro assumptions are taken into account for the 2025 to 2028 guide?
Yeah, I can start on macro and then maybe start a little bit on the Cash App Borrow question as well. So macro assumptions, I would say nothing. We're not leaning in one direction or another. I think we've assumed a relatively steady macro environment from where we are today. And so we're not making a bet that the macro is significantly better or significantly worse going forward. I think we have a lot of conviction in our ability to execute on our plan. And the macro environment we're assuming is relatively stable from here. I don't think it's the most dynamic, amazing macro environment in the world at this point. And so they were kind of assuming that just continues over the course of the next several years, which kind of dovetails into the Cash App Borrow question. So for those of you who saw the Boats, Brian Boats Head of Risk presentation, there's a really cool chart there that shows like the Cash App credit score distribution. And it shows where it is today and where it would land in a recession, or where it could potentially land in a recession based on like one specific scenario that we ran. I think what gives us a lot of conviction in managing Borrow and scaling it as we have, 134% origination growth, pretty stable loss rates under 3%, is product architecture and just the quality of the team and the quality of the data that's inputting into the Cash App score, which is then informing credit decisioning. So the duration of these products for Cash App Borrow and Afterpay is around 25 or so days. And the structure of the product lend themselves to people trying to behave responsibly and our incentives being aligned. So you can't revolve your credit if you're late on a loan, you cannot take out another loan. The ability for us to learn really quickly as we scale these products is a function of the product architecture in the 25 days that these loans are outstanding on average. So if we were to enter some kind of recessionary environment, I think we'd be able to navigate that quickly because we have such fast-paced decision-making on when the data is coming in and when the underwriting cohorts that we're underwriting or the underwriting cohorts that we're lending to are maturing. We have roughly like again, this 30-day period between when you originate a loan and when you have a really good understanding of like the entire cohort's performance. And we can use that speed of decision-making or the speed of information flow to help us navigate changes in the macro environment.
Just a couple points to add on. I think we also happen to have an incredible real-time understanding of what's happening in the markets we operate in. So if you look at the US, we have 26 million Cash App Card customers. So we have a real-time view on what is happening, which then informs our models more quickly than the kind of 6-week lagged, retail sales report or PCE report or what have you, which is great. And then I think having previously worked at a macro hedge fund, we don't really want to be in the business of making bets on macro. So we have center point expectations. We similar to how you don't presume some sort of recession that no one can predict. We also are not presuming that tax refunds are going to do XYZ or there's going to be a tariff dividend or what have you. And so I think that we're well set up to execute regardless of what happens in the macro environment.
Great. So we're running up on time here. We'll go to our last question. This is an anonymous question. It's on Neighborhoods. So Neighborhoods offers both pickup and delivery. Pickup is straightforward, but how is delivery fulfilled? Is it handled through a partnership with DoorDash or another third-party delivery provider, or is there a different model in place?
Great question. We have partnerships with DoorDash and Uber Eats and local delivery fulfillment if you want. And so we're not in the business of providing delivery solutions for our sellers, but we facilitate that through the products that we offer to them.
All right. Well, I'm I guess I'll close it out here. I know we're at the bottom of the hour. Let's say like two things. One, or maybe three things. Thank you all for being here. I really appreciate the time. Like Owen and I are this is only the second time we've done it, but we've been pretty fired up both times to have the opportunity to talk to folks and talk about everything that we're building here that we're pretty excited about. Number two, which I know many of you aren't shy about, but please keep the feedback coming. Like what's working, what's not working. We want to continually improve both the business and just how we're communicating to shareholders. And so things that we can do better, please let us know. And third, which I hope was evident from Investor Day, like I'm quite excited about what we're building here. And I know Owen is also, and like Owen, let you close out too, but I think we have a lot of momentum across the business. And I just see like the pace of development velocity, the pace of go-to-market expansion, the pace of decision-making. I think it's all really positive, and I'm pretty pumped to and see where we head out over the course of the next few years.
Thank you all for taking time out of your day to listen, and we'll keep engaging with you on X and on a bunch of different forums. So appreciate it. See y'all soon. Thanks.
Thank you.